Five best ways to invest money for high return in a short time. Well, if you're looking to invest, best way to invest money for highest return in a short time, well, I'm going to share some of them. Well, obviously, I'm going to share five ways. And the fifth way is for professional investors, like they do it for a living. That's what they do. Um, so I'm going to share five ways. And before with that, I go into that, I want to explain some more details about the best way to invest. There's no best way to invest because investing itself is subjective, like money, all finance itself is subjective. If you say what is my best car, it's very different for me than you or somebody else. So these whole things investing are subjective. So with that said, there's no best way. It's about you and what's right for your situation and what about you, like what's your best car. So you have to find that for yourself and also learn from experience. And I want to say one more thing. If you're looking for the quickest return, highest return in a short amount of time with no risk at all, and you want to have your capital anytime you want to take it away, like no zero risk to your capital, and you can take your money anytime you want. That's like looking at it as a lottery mindset. That's like buying a lottery. Think about it. What chance you get success in lottery? Obviously, some people do win. It's nothing wrong with it. It's also an opportunity, but you lose your whole capital, even if it's $10, $5. But that's the game you want to play. So lottery is probably the one of the like you can get quick, short term, very high return, but it's very rare. And I don't recommend it, but it's one of them. So if you're already playing lottery here and there, or if you know some people who are doing it, then they're high in their mindset, lottery mindset. Versus here, I'm sharing five ways, and obviously, fifth one is a professional, which is a professional investor who do it for a living, and that's the ideal you want to get to, depending on your level of skills and where you are. You don't have to do it, but obviously, very few do that. But there are other ways you can invest with whatever you have. But I'm going to share five ways. Obviously, not all of them are same risk. Some are high risk, some are low risk. But I'm going to share five ways, the best way to invest money, depending on you, of course. Um, if there's no risk, usually there's no opportunity in some ways, because usually when there's some element of risk, even it is just like wasting your time. Think about it. Sometimes you're just wasting your time because it didn't work out, versus other times you're putting your capital at risk. Those two are different things. Okay, so there are some ways actually low risk, some are high risk, but it doesn't always have to be risky. Like the level 5 I talked about, fifth way, which is like a professional investor. They have a lot of experience and they have many ways of investing money, or at least from their experience, and they have some criteria and they follow the criteria, and usually they are okay. Now it doesn't mean that they're going to make huge profits all the time, but whenever they take some chances, there's some risk involved, probably with some low downside. um, so with that being said, there's always some opportunity of risk, and that's why it's an opportunity, right? mm. So I want to, before I go into all the details, I want to say it doesn't have to be always risky. Like, there are some predictable risk. Predictable risk is like, you own your own business, and you don't put your capital at risk. No, obviously it's subject to, it depends on what you're doing. Like running your own business is a subject to, and you're not putting all your capital at risk, but you can invest in your own business. That's one of them, one of the way you can invest, best way to invest your money. But obviously, it's not something short term. But I want to share here there are different things. Short term are usually trading, but here I'm in the context I'm using as investing because that's what everybody's looking around. Um, so usually the interest rates are low. It's very difficult to find good investment opportunities because think about it, your money is rotating and circulating, and if you can borrow money very cheap, it obviously makes sense that you're going to get low return on the money, and there's very high competition also. So that's what it is. And if interest rates are high, then you can put your money at work to get higher return. That's obvious. The best, I'm gonna share the investing ways I talked five with low risk to high risk to low risk. The number one is investing in stocks that you understand, stock markets. If you are a seasoned professional and you're already kind of a little bit experienced, like when there's a big market corrections during a financial crisis or a big issue happens and there's a huge discount, and you understand them well, and there is still some risk, but assuming you are okay with that, That's obviously number one. Investing in stocks during a crisis or when everybody is selling, or you see that's an opportunity to hold for a week or a few days, and you can make pretty good profit, but that's a high risk. So, and it's also up to you about your portfolio, what you manage, how much you want to put into the capital. So, investing in stocks that are depressed or during financial crisis or once in a lifetime or even once in decades, they are going to come again. So it's not like they're gonna come, but you don't know when. It's like opportunities are always there. It's about you and what you're looking at, and also are you able to act on it? Because sometimes you cannot, even though you can see it, you can't act. And other times people cannot even see the opportunities. So investing in stocks during extreme situations is there, and it's not all the time, but that's one of the best way if you can put some capital. But it's not always recommended because you have to always look for it, and you're like taking time away from your actively and how much you want to put. There's a lot of things involved. But if it's something, but it's not all the time, so that's not obviously like available all the time. Hence, it's rare opportunity. Think of it like winning a lottery, but it's not as rare as a lottery because if you're seasoned, a little bit experienced, you can see some opportunity when the extreme corrections happen. And if you have cash, you can have a good opportunity for you. And that is high risk. Now, medium risk is like using peer-to-peer lending, like Prosper Lending Club or any of these online lending stuff. You can be a lender and you lend your money, and on the other side, people are taking loans for whatever projects they're working on, and you get a return. So the rate of return depends, grade A to all different grades. So it's a medium risk. But even then, there's some risk involved. So investing in peer-to-peer lending, like Prosper, Lending Club, all those other online stuff is one of them. Number two. So number three is like low risk, using putting your money in a CD or money market account, depending on what brokerage account you have. If you look for 6 months or like some time, not so long term like 10 years, but you can get some return like 2% to 4 or 5%, depending on timing, because sometimes they're low returns. Unless the federal market rate and the interest rates are higher, you probably won't get that much return. But that's one of them. Let's look very low risk. And the fourth one I want to show you is very, very low risk or zero risk is to pay off all your debts. That is your credit card debts, or all your debts that are at least 6% or more. Or even probably just pay off all your debts, including your house, if you can, if that's your ideal. But it's subject to you. So if you pay off all your debts, that's the fourth way to put your money to work. So if you have credit card debt, consumer loans, or student loans, if you're just paying off all of them, that's another way to put your money to work. So you don't have the liability of paying what are your cash to somebody else who is an asset on the lender side. So that's another way to put your money to work. And now I want to share the fifth way, that is the investing money as a professional investor with the investor mindset. In the beginning, I talked about the lottery mindset where you're just looking for quick money return for the shortest time, which is probably very, very rare. You probably lose your money. Versus the investor mindset, which is like on the higher level of skill where you have to develop and build upon. Um, these are rare, but they do come, but it's not like often. And also, somebody who's a professional at this level has a lot of other skill sets. It's just not like putting your money and just looking for money. There are a lot of other skill sets and experience at this level, but I'll give some experiences who are professional real estate investors who do this for a living. A simple example could be a real estate investor who's looking for a next deal. And when do they get the opportunity? When they get a motivated seller. That is, somebody wants to sell the house quickly, or they need cash for an emergency, and they need to sell quickly, they can't wait, or they need somebody who's a cash buyer. So there are a lot of, it's very complex, a lot of things involved, but on a higher level, I'm giving you, if you go as a real estate investor and can see an opportunity there, and it makes sense to you, and you can make highest return on your money in like a few weeks to a month, depending on what other is. But this is like professional level, like you're doing it for a living or you're doing it as a side job after a lot of experiences. The same thing can be said with other stuff like paintings or buying cars, any of those things. Like when people are in emergency, or situations where you are the person who are able to help because nobody else is there, or you are the one who is able to see and also help and make a profit out of it. Now that's a whole subject by itself, becoming a professional investor and making a living. Like it's more like a trading at that point because you are looking for short term, but this is not really like a long-term investing, like a buy and hold house or other ways of buy and hold long-term stocks, but it is there. People are buying and selling cars, people are buying and selling homes, and that can be a side job or a full-time job depending on where you are and what's for you. But it's like the one of the better way, because where you are there and there's an opportunity, somebody is in a situation or issue, and you come as a way to put your money to work, and you help them out and they get out of it, and you're going to profit. So win-win situation. It depends on the deal and all of the details, but that's the last one. So finding those opportunities is a lot more things involved. It's a subject by itself. But there are many people who are real estate investors and professional investors. So that's one of the best way if you can get that level. So here are the five level of investing. With the lowest risk is paying off your credit card debts, all your personal debts, to the highest risk investing in stock markets, which is very liquid, so it's quick, uh, depending on whatever you get into. So those are the different ranges of risk, and the returns are also inversely proportional. So hopefully you learned something new, and you can share below if any investing you did in you got a very good return.